Hi traders, this week my focus is on sterling against the US dollar. I'm looking for a bullish move to 1.3609. This week I'm in sunny Barcelona at the FXStreet head office. In this video we're going to discuss Cypher pattern analysis. We're going to look at a potential entry and exit level for this forecast. We're also going to discuss what institutional traders are looking at, and we're going to also highlight the driving forces behind this forecast. Hi, my name's Ian Coleman. I'm a senior analyst at FXStreet. I want to discuss both the fundamental and technical reasons behind my sterling dollar bullish outlook. We'll look at the 4-hour chart and we'll talk about the optimal entry level for this sterling dollar move. Before we do that, let's talk about the driving forces behind this move. On Wednesday, we saw weaker than expected UK inflation data. That resulted in sterling against the US dollar moving to the downside. However, on October the 14th, the IMF said that the UK is likely to have the highest inflation in the whole of the G7. Now that should keep sterling strong over the medium term. In the meantime, next week we've got the Federal Reserve interest rate decision. If they continue their cutting cycle, that should mean lower dollars, and in turn that should keep sterling against the US dollar to the upside. Back to the technicals, I'm looking at a 4-hour chart. This is my preferred time frame for swing trades. Now, swing trades will normally last probably between 5 and 7 days. So if you haven't got much time in front of the screens, this is the preferred way to trade. My analysis suggests that we are building a Cypher pattern. This is known as a butterfly formation. Now, how are these patterns formed? Well, we use Fibonacci extension tools. So we've got a 127.2% extension of this move. That comes in at 1.3609. We've got a 161.8% extension of this move, and that comes in at 1.3609. So we've got a nice confluence area, and that builds this butterfly formation, which is our target level. So if I'm going to trade this pattern, where is a good entry? Now, institutional traders, they look for liquidity. Okay, so they need high liquidity to be able to execute large trades. We've got a demand zone to the downside located at 1.3284, and that's an area of high liquidity. It should be noted that if we break through the previous swing low, which is located at 1.3248, then this whole analytical view is negated. A quick summary of what we've discussed. I'm looking at sterling against the US dollar. I'm looking for a positive or bullish move up towards 1.3609. I believe a prime long entry is close to 1.3284. That's where I believe institutional money will be looking at buying this pair. However, a move through or lower than 1.3248 would negate this outlook. If you've enjoyed this video, please subscribe to our channel. Leave a like or any comments that you might have. Bye for now.